Hello all. In the previous videos, we have discussed with the current assets activity as well as the absolute liquidity ratio. Along with that, we have also discussed with the proprietary ratio and the debt equity ratio. Okay. So today we will discuss about the turnover ratio, which is also called as the activity ratio. So the main terms turnover always deals with the sales activity as well as the purchases activity. Okay, so here in the case of the calculation purpose, you will be asked to calculate. First one is data's turnover ratio. Okay, and the next one is out of the data's turnover ratio, you need to calculate the average collection period. I'll tell you what is average collection period later. Okay, and you should also compute the creditor's turnover ratio along with that, which is also called as the payable turnover ratio, along with that average collection alone. So these are the four kinds that will be computed to find out the turnover ratios. Okay, so here in the case of the problem, they've asked you to compute the debtors turnover ratio as well as average collection period. Before calculating, know what actually this debtors turnover ratio is and what actually this average collection period is. Here, until unless you don't know the meaning and you don't know the exact formula to be applied, it is impossible to go ahead with the turnover ratios. Okay. So what is debtors turnover ratio? So debtors turnover ratio is how quickly or how rapidly the collection will be received from the receivables. Okay. In what duration you will be reached with certain sales will be computed here. And one more, the thing that should be remembered is always in the case of debtors turnover ratio as well as the creditors turnover ratio, you will be taken into consideration either the credit sales and the credit purchases. Clear? Only the credit sales and the credit purchases is taken into consideration. Should not consider the information which is given as the cash sales or the cash purchase. Okay. So here, so debtors turnover ratio includes all the net credit sales. So what is debtors turnover ratio? How rapidity of collection which will be received from the receivables will be found out. Okay. So, and you will be computed along with that average accounts receivables. So average accounts receivable is very easy. So they'll be giving you with the debtors. So what is accounts receivable? Accounts receivable is also called as the bills receivables. In turn, in a general meaning, it is also sometimes called as the debtors. Clear? Sometimes bills receivables in the beginning and bills receivables at the end will be given. Sometimes debtors in the beginning as well as total debtors at the end will be given. So you need to take either that information, either this information into consideration for average accounts receivables. Clear? So here, make a note, total debtors in the beginning is given, along with the total debtors at the end is given. So calculator divided by 2, you'll get the value of the average accounts receivables. So what is the average accounts receivable gives you 50,000. Okay. And along with that, you should also compute the debtors turnover ratio. That is, you should know what actually this net credit sales is. Sometimes total sales will be given and cash sales will be given. Credit sales will not be given at that time. You should also find out the cash sales. So total sales minus cash sales gives you a credit sales. You need to find out the credit sales, not the cash. So total sales minus cash sales gives you the credit sales. So see in the question, so cash sales during the year. We don't require the cash information, so ignore this information. Credit sales is given as 2,70,000. So if there is any sales returns, that should be reduced. Okay. So as it is a net, it is not the gross. If it is the gross, then you would have taken 2,70,000 into consideration. As it is a net credit sales minus the sales from the sales return. So what is the sales return here? 2,70,000 minus 20,000 gives you 2,50,000. So average accounts receivables you have computed as 50,000. So 5 times. So collection of the debtors, that is out of the sales made by the company, they can collect the amount 5 times. Clear? The rapidity of the collection can be made from the receivables with how many times? 5 times. ಸೊ 5 ಸಾರಿ ಅವರು ಕಲೆಕ್ಷನ್ಸ್ ನ ಮಾಡಬಹುದು ಅಂತ ಕಂಡುಹಿಡಿಬೇಕು with the information of debtors turnover ratio. So when the term debtors includes or moves on only with the sales information, remember debtors only goes on with the sales information. Here, as it is a debtors turnover ratio, especially it considers only the credit sales information, not the cash sales. Clear? And you are also asked to prepare find out the average collection period. Okay, it is not college, it is collection period. So collection period, so average collection period takes into consideration your debtors turnover ratio. That is the part of debtors turnover ratio, it considers the average accounts receivables. Why it takes the average accounts receivables? Know what actually this average collection period is. Average collection period is nothing but it is one of the average period which will be granted to customers as it is a debtors. As it is a debtors, it deals with the customer's information. Whenever it is a creditors, it deals with the supplier's information. Okay, so it indicates the average period which will be granted to the customers by the company. So in what period, in how many number of days or how many number of months the collection can be made out of the sales made. ಒಂದು ಗೂಡ್ಸ್ನ ಸೇಲ್ ಮಾಡಿರ್ತೀರಾ ನೀವು, ಸೊ ಅದಕ್ಕೆ ನೀವು ಎಷ್ಟು ಪೀರಿಯಡ್ ಕೊಟ್ಟಿರ್ತೀರಾ ಅಥವಾ ಅದಕ್ಕೆ ನೀವು ಎಷ್ಟು ಕಲೆಕ್ಷನ್ ಪೀರಿಯಡ್ನ ಎಷ್ಟು ನಂಬರ್ ಆಫ್ ಮಂತ್ಸ್ ಅಲ್ಲಿ ಅವರು ಪೇ ಮಾಡಬೇಕು ಅನ್ನೋದನ್ನ ಡ್ಯೂರೇಷನ್ ಆಫ್ ಫಿಕ್ಸ್ ಮಾಡ್ತೀರಾ ಅಂತ ಕಂಡುಹಿಡಿಬೇಕಂದ್ರೆ ಯು ನೀಡ್ ಟು ಪ್ರಿಪೇರ್ ದಿಸ್ ಆವರೇಜ್ ಕಲೆಕ್ಷನ್ ಪೀರಿಯಡ್. ಕ್ಲಿಯರ್? ಸೊ ಇಟ್ ಇಸ್ ಅ ಲೈಕ್ it is also called as sometimes like a EMI. Okay, so within what duration you will be settled with such amount, so that can be computed with the help of average collection period only. Okay, so average collection period always takes the 365, that is number of days in a year divided by debtors turnover ratio is 5 times, so divided with the 5. So 73 days, within 73 days the amount which will be settled to the 73 days is the period which is granted to the customers for clearing their sales amount. Okay, so now moving on to the concept of creditors turnover ratio as well as average payment period. Okay, so from the following information calculate debtors turnover ratio, average collection period, payable turnover ratio and average payment ratio. See, listen, whenever there is a debtors turnover ratio, see only the two information is given or not. Receivables is given, opening and the closing is given in the case of receivables, along with the credit sales is given. In the case of payable turnover ratio, see only the two information. Bills payable information is given, opening as well as closing bills payable. Sometimes they don't give you opening and closing, directly the amount will be given, no worries with that. And there is a information of credit purchases. Okay, and out of the value that you get, that will be divided with the number of days. Okay, so here see the information. Sales rupees 8,75,000 is given, creditors 90,000. Remember there is only a sales information here. Bills receivables rupees 48,000, bills payable 52, purchases 4,20,000, debtors is given as 59,000. Okay, so what do we need? Debtors turnover ratio. See, they have not specified what actually these sales is. Whenever they don't specify any information, whether it is whenever there is no information of cash sales or the credit sales, consider the whole amount as the credit sale. Okay, So average accounts receivables will be, so bills receivables is given as 48,000. Okay. So here in the case of debtors, they have given the bills receivables as well as the debtors. Sometimes listen, they'll be given you with the bills, opening bills receivables as well as opening debtors and closing debtors, as well as opening bills receivables and closing bills receivables. All that information should be taken into consideration. Okay. Here there is 48,000, along with that debtors is 59,000. So bills receivable as well as bills receivable 48,000, as well as debtors for 59,000 is added together to get the information of accounts average accounts receivables. So gives you 1,07,000. Sometimes opening debtors and closing debtors, sometimes bills receivables and closing bills receivables given. Sometimes these informations will be given. You need to add these information. Clear? So it comes to around 8.18 times. So average collection period, I told you 365 will be divided with the debtors turnover ratio. Payable turnover ratio, I told you you have to consider the net credit purchases. See whether there is any credit or the cash purchases information. No, whenever they don't specify anything, these purchases itself becomes the net credit purchases. Okay. So take this information as net credit purchases, and average accounts payable is also same. Creditors will be added with the bills payables. Clear? So you'll get some around as 2.96 times. So average payable period will be 365 divided by 2.96. So do not round it off. Take as it is, however, the value or number of times you get. Okay. So what actually this average payable period is? It is an period which will be granted by the supplier to the company. Okay. For the thing that you have purchased, what is the duration or what is the number of days or how many number of months you will be settled with the certain amount, so that will be granted by the supplier here. Okay. So which comes to around 123 days. Clear? So now calculate the gross profit ratio based on the following information. Problem number 22nd. So you need to compute the gross profit ratio. Be very particular with the calculation. Okay. Cash sales is given as 25% of total sales. See now whether total sales is given or not. Purchases is given 2,76,000. Okay. Credit sales is given as 2,40,000. They have not specified the total sales. Clear? And excess of closing stock over opening stock is rupees 20,000. Make it as very important note, this one. This kind of question will be asked for your 6 marks. Okay. So what is the gross profit ratio formula? It takes the gross profit along with the sales into consideration, as the sales information is missing here. They have not specified anywhere what exactly the sales is or the total sales is. So consider, out of the percentage given, consider total sales as 100. So cash sales is given as 25% of total sales. So 25 minus it, which comes to around credit sales as 75. Clear? So for when a total sales is 100, 75 is credit sales. So 100 ಗೆ 75 credit sales ಆದರೆ 25 ಗೆ ಎಷ್ಟಾಗುತ್ತೆ ಅಂತ ಕಂಡುಹಿಡಿತೀರಾ. Okay. So 25, 75, 2,40,000 into 100 divided by 75, which gives you 3,20,000 as the total sales. As we require the total sales, this 75 as well as 100 will be taken into consideration. Okay. So here, in the case of this information, what is the information that will be computing? So you got 2,40,000. 2,40,000 into So you need the total sales to the full amount of 100. So 2,40,000 into 100 divided by what is the information is given? The credit sales information is given. So 75% ke 2,40,000 anta kottidare. So make it as divided by 75, you get 3,20,000. Clear? Don't take 25 as the value because you have to compute the cash sales here. Okay. So 25% goes for the cash sales. So total sales we need 3,20,000. So now the gross profit calculation. So still you have not computed with the gross profit. So sales you have come across with the 3,20,000. And there is one statement here, excess of closing stock over opening stock is rupees 20,000. So add back that information. Adding excess of closing stock over opening stock is 20,000. So you don't know what exactly these opening stock is here. So 3,40,000, and out of the sales, purchases will be deducted. You get 2,76,000, and which comes to gross profit as sales minus cost, or sales minus purchases gives you the gross profit. In the same way you need to do it. So 64,000. So gross profit calculation is profit divided by sales into 100. Profit you have calculated 64,000, and the sales you have also calculated as 3,20,000, which comes around 20%. This ratio is also important, gross profit ratio here. And make a note, this is as one of the very important adjustment. Whenever there is any excess, so which will be deducted. Whenever there is reduction of closing stock, so which will be minus. Clear?